Welcome to Utah Story Show. So today on the program, if you are a first-time home buyer, if you've been looking to get into real estate, if you are house poor because you are paying too much for your mortgage, you need to watch this show today because we're going to be talking to a realtor. We're going to be talking to some people who got the affordability, housing affordability grant, and we're going to be showing you a developer who's trying to develop $100,000 homes, if you can believe it, in Utah, and how the city is shutting him down. You have to see this because it's you get this idea that the only way to affordability is the government giving money, grants, handouts to developers to make it happen. That is probably part of the solution, but there are also developers out there who want to build affordability and affordable housing. And there are people who are stuck on the streets, seniors in particular, who are on a fixed income, who can no longer afford the Wasatch Front housing market prices, and they need to get into homes. And there is a solution out there that we want to propose. We hope to have you chime in today because this is a solution that we need to get out there and have it vetted because it's the idea of building either prefabricated homes, modular homes, or trailer parks just to get people into permanent housing and get people into more secure situations so they can get off the streets or not risk being so house poor that they can just barely afford their mortgage. But first of all, today we're going to be talking to Eric Gardiner, who's a Utah real estate agent operating mostly in Sugar House. Thanks for coming on the program, Eric.
Thanks for having me, Richard.
So from the last time we talked to now, it's only been like 2 or 3 months.
Yeah.
The housing market has definitely dramatically changed in Salt Lake City and Utah. Describe the changes that you've witnessed.
Yeah, so with the changes this recent market cycle, the Fed has been aggressive with raising interest rates. They're raising their Fed funds rate. And with that raising a Fed fund rate, you automatically that feeds to the mortgage interest rate. And mortgage interest rates, the Fed raised their rate on Wednesday. Today's Friday. And now I've heard that they're floating around 6%, 6.1% for a 30-year term mortgage. And when you have mortgage rates that high, typically...
It was like 2.5, like just 6 months ago, right?
Yeah, so six months ago, the Fed was pumping money into the system. They had their rate at zero at that time. They were, 2.5% for a 30-year mortgage, maybe 3% max. I think I refinanced at 2.75, something like that. I think I saw a stat, 80% all have mortgage rates under 3%.
Yeah.
Because they all refinanced during the pandemic when the Fed had Fed funds rate at zero.
So money was super cheap. Now it's a lot more expensive. So are you seeing housing prices come down yet? Has the market reacted?
I think the prices for homes have definitely compressed. A couple months ago, people were still listing their home prices as if it was January, hoping for some crazy person to come just overpay. And because they did that 3 months ago, now they've had to lower their prices. And now people are probably listing more in the reality area. The issue is, we still have days on market. We're returning to pre-pandemic levels. So August of 2019, median days on market were 22. That's what it was this August, just last month.
Just 22 days.
But during the pandemic, they were 7 days or 10 days, which is not normal. Like, it's normal for houses to sit on the market for a little bit of time unless you're at a fire sale. Mm-hmm. So yeah, prices are definitely compressing a little bit. Rates are what are causing that. And so it's just that's what's happening with the market as the Fed gets aggressive with inflation by raising interest rates, by reducing their balance sheets to take cash out of the market just to slow it down, to slow down prices.
Yeah, and it's like usually you describe the market as a buyer's market or a seller's market. Now it's like if you try to buy something and you have a 6.5% interest rate compared to 2.5%, it's not exactly a buyer's market because you're going to pay, just for an example, if you were going to buy a $500,000 house and you paid 2.5% on a 30-year loan as opposed to 6.5% on a 30-year loan, what's the payment difference? Do you know?
Oh, that I don't know off the top of my head, but it's definitely, and that's why interest rates compress prices because affordability. Most people shop, whether it's for a vehicle or a house, you're always shopping for what your monthly debt to income is.
Mm-hmm.
So it's like, if I can afford $2,000 a month, principal and interest, if the interest rate's lower, it's a higher dollar price house. If the interest rate's higher, it's a lower dollar price house.
So at 2.5%, if you're making, say, $60,000 a year, maybe you can barely afford a $500,000 house. But if you are at 6.5% and you're looking at $500,000, probably that's completely out of your price range now.
Absolutely. Like, you gotta. It comes down to that, how much of your mortgage is going towards principal and how much is going towards interest, and making sure that fits within that debt to income ratio that the lender requires.
Yeah. So are you finding that you have fewer buyers? Is it?
I'd say a lot of buyers have definitely left the market. So with a lot of real estate sales, there's a lot of online lead sources, Zillow, Realtor.com, whatever, pay-per-click marketing. And just because of the fear in the market, or like the skepticism of like worry of a recession or interest rates, like a lot of buyers have definitely left the market. Like, they're concerned. But even like when things were crazy, interest rates are low, people left the market because they just thought they were going to get outbid.
Mm-hmm.
So it goes both ways. In my opinion, there's no perfect time to buy a house or get a mortgage. It's like, what do I need to do as an individual for me and my family that makes sense? That's when you move.
Yeah.
Like, timing the market's a waste of time.
Yeah. You can't ever predict what's going to happen. And 3 months ago, you could have never predicted we'd look at 6.5% interest rates.
Correct.
But do you think you think rates are going to keep climbing as this year progresses? Do you think prices are going to start declining?
So my honest fear is that the Federal Reserve, Jerome Powell, is going to get too aggressive. He did 75 basis points this month, 75 last month, and I think 75 the month previous. I think he's going to do it again next month, and I think he should wait, see how all those previous rate hikes have affected inflation, because I don't think they like interest rates and what the Federal Reserve can do they affect prices within 30 days? I don't think so.
Yeah.
Whether you're going up or you're going down.
It's always going to lag.
Like, it's always going to lag, probably 2 to 3 months. So I'm really concerned that the Fed is over tightening right now, to be honest. I think, they should ease up, skip a month, see where prices go. Like, because we get the inflation report every month, and I think last month it was like 8.3%, which is still super high. I get it. Like, yeah, we're super high. The Fed target rate for inflation is always 2%. And Jerome Powell's stressing out. He's like, I screwed up. We're way too high. So I got to crank it down, shut down spending. But I'm worried that there's not going to be this soft landing he's been talking about.
Well, yeah,
there's going to be a legit recession.
Yeah, I heard him say it's not going to be soft on Wednesday, right?
It's not. Like,
we're going to have a hard landing.
And that's why I would say, slow it down just a little bit, see what happens. I read a report on Wednesday that said consumer confidence is very high, even with high inflation.
Yeah.
So to me, it's like,
I mean, look at the jobs report. There's so many job openings still.
So jobs are good. Consumer confidence good. The builder report was down, so I think builder new starts was at like 46% or 46 out of 100, and anything below 50 for the builder report is not good. It means builders are slowing down. But either way, with a few good numbers, I would prefer he ease up rather than all these almost 1% increases.
Yeah. Just
to see where inflation goes.
Yeah. So, if you're a first-time home buyer and you've been, shopping around trying to find the best deal, what would you recommend, especially people on the lower end of the income scale, the people who are earning less than 50, 60 grand a year? Would you rent right now and hold out, or would you encourage them to buy?
So I don't think there's any necessarily bad time to buy, as long as you're buying for the right reasons.
Yeah.
If you're buying hoping to make money because the appreciation is going to go through the roof in the next year and you're going to sell in a year, that's not a good decision to buy. Like, that's not why you buy a home. You buy a home because you want a place for you and your family. So you're buying for the long term. And when I say long term, I think, at least 10 years, 7 to 10 years. Yeah. So it's like, if you're going to buy something.
And I think probably it just went from if you were going to buy, you probably wouldn't have been okay to say, I'm going to live there for 5 years. Now, probably you want to be looking at 7 to 10. Would you say that?
I think,
Or would you always say 7 to 10 years?
the market in Utah, what's it going to be in 5 years? I think you'd be net positive if you bought right now. Like, even if there's more compression, like a slight dip or recession, in 5 years, I bet you're good.
Yeah, I want to show my screen right now, if we can see it. So this is an article from the Deseret News. 70% of home sellers in Boise, Idaho, drop prices in nation. Utah, Colorado cities rank close behind. So Boise was one of the fastest growing in terms of price increases over the last year. And Salt Lake City, Colorado were right behind. Las Vegas, also huge price increases. Is the good news maybe now we can just see these prices start to come back down to earth, and these sellers realize, okay, I'm not going to get 2021, early 2020 prices anymore. I'm going to have to go back to like 2019 prices, and then sellers can pick up a better bargain.
I think sellers, they're going to have to come down to earth. If they need to sell, they're going to price. They're eventually going to price it realistically. Maybe not initially, but prices definitely going to come down from, like, maybe not market, but just from unrealistic, over optimistic sellers. And with that, it doesn't necessarily help that first time home buyer because rates are higher now, and that's so it comes back to that. What can you afford monthly? That debt to income ratio type conversation. But you're definitely going to see a few deals on the market. Yeah. It's just, okay, does it make sense for me to buy right now? Or do I have the affordability?
And it's definitely not a home flippers market anymore.
The home flippers market. So, I talk to people about that all the time. And we're actually finishing a house right now to list next week that me and my partner have been flipping in Bountiful. And, like flipping in a semi-downward market, it's concerning. Like, you don't know what you're going to get. You might lose money. So
you mentioned Open Door. I hadn't heard of them, but they're a big corporate investor, home flipper company. You said their profits just took a nosedive.
Yeah, so their Q2 earnings were really bad. So Open Door probably, I don't know how many markets they flip in, but they went super aggressive in Utah over the last 9 to 12 months. And they actually poked fun at Zillow Q3 last year because that's when Zillow realized they weren't good at flipping houses. But Open Door, their strategy was buy a house. They were on all the radio stations. Buy a house, do paint and carpet, and that's it. They didn't do anything besides that for the most part, and then just relist it. Mm-hmm. And their fees, like I've seen their contracts, they charge 5% for that seller who sells it to them without fees, essentially. Like you're not paying a realtor, but you're still paying 5% to Open Door. So... But they've been losing their butts the last 5 to 6 months. Like I've been tracking a few of those the last couple months just to see, and they're not doing well. And their earnings just showed that in Q2. And I think flipping is a very local activity. Like being an online brokerage or a tech company and trying to flip homes, you don't know the market necessarily. You don't have local contractors. I've actually filmed a few videos on this, like why Zillow failed at it. You don't have the relationships, like flipping, and a lot of things in home sales are relationships. And being an online tech company, you don't have those.
Yeah. So what is it you think government leaders can be doing to create more affordability in the market? What do you think the main primary things that they, when they say we've got $50 million this year, the state legislature allocated toward affordability, how would you write those checks?
I think some of that's probably zoning. I think a lot of cities, they zone out poor people. Mm-hmm. Like the whole not in my backyard syndrome. And we have that with commercial buildings, but we especially have it with poor people. Yeah. No one wants a poor person living next to them. Mm-hmm. And that's a huge issue. So you go to a nice city, and I'm not going to name any, but they all like, nah, we only want $600,000 houses in this neighborhood. We're not going to have any $200,000 houses. Yeah. So zoning's a big issue. Aside from that, it's just like allowing those types of buildings to be built. Because like you mentioned, I think in the introduction, trailer parks, no one likes that word anymore. Most trailer parks are being torn down. They're not going to renew anything. You talked about prefab homes, which to me is like the new trailer.
Mhm.
Like they're nicer for sure, but they're definitely trailer-ish.
Yeah.
Or just like lower income, smaller homes. Like everyone sees estates near them.
Yeah.
So it's like, what city is willing to deal with that? That's the biggest issue, I think. Like
Yeah.
just cities and people, they want to push that out to the outskirts, and that's not the place where you want people who need housing. You don't want them in the outskirts. You want them in the community so they can grow and thrive as an
Yeah.
individual.
Yeah, I totally agree with you. And in coming up later, we're going to show an example of this Daggett County, where I'm sorry, it's where the new prison is. It escapes my mind. But anyway, it's like far south of here. It's a long commute, but it's like they have this affordability built into this park, this trailer park that this guy wants to build out. And these are modular homes. I mean, they're not as nice as homes that you build with a builder, but the cost per square foot is like $100 compared to $300.
Yeah.
And most people just simply cannot afford $300 a square foot. And you build something in a factory setting, you can build in those efficiencies.
Yep.
Like the efficiency of factory built homes is just so far superior to hiring a bunch of guys who want $50 an hour to come out to a site, especially in rural areas, and work there. And if they live far away, they're going to commute an hour every day. It just seems like such a no-brainer. And what's your opinion on that? Do you think that we just need to have a new mindset when it comes to prefabricated homes?
Definitely. So I have a few people I know that love prefab homes, whether it's a garage or it's like an accessory dwelling unit, ADU. And today I drove by a trailer park just on I-15 in Bountiful, and you just made me think about this. Like, what if you took those old trailer parks where everything's spaced out for double wide trailers, and you took out all the trailers, say there's 50, and you just made it more dense with accessory, like prefab homes? Because the technology's come a long way. How could you put
a lot of them? You can't even tell. They're prefab.
Exactly. So it's like, how do you add a little bit of density in that existing trailer park already? Like that's an easy way, because there's a lot of good trailer parks in dense areas. There's a bunch in South Salt Lake, Mill Creek. If you go down State Street, there's a whole bunch of them that you could, and you could revamp them. Like if the state wants to spend money, that's a good place to do it. Like go to that property owner and say, hey, you have 50 residents right now. Let's start a transition to like move them all to one side and bring in some different types of dwellings, create some more density. You're going to get some more revenue.
Yeah.
We're going to help get some more people in this community that's close to things rather than on the outskirts. It's going to help a lot of people.
Yeah, and it's like there's a mobile home community not far from where I live in Holiday, and it's right off of Van Winkle and I believe Murray Holiday Road. And it's like you go in there, and most of those units are really nice. Like they're obviously happy to be there, and they have like little lawns, and they're modular. And I talked to a realtor about this in Moab. He got his start from a mobile home park.
Yeah.
And there used to be 4 mobile home parks in Moab, and it's like that's a mining community. Everybody needed affordable housing. A mobile home park allowed miners to live super cheap, and that town got built out. And now Moab is so local. Like a lot of people go there and they're like, wow, so many local restaurants and so many great local places. It's thanks to the mobile home park community in Moab that these people were able to set aside money, build out a business, build out a building, and have that financial freedom to pursue becoming an entrepreneur. And I just think there's this stigma attached to mobile homes, but it's like if you can set aside money that way and then use that money toward a big down payment on a home, that's so much better than these wacky nothing down home programs where you have a first mortgage, a second mortgage, and then you're just super house poor.
Yeah.
And
or you're, rather than being in a mobile home paying, $600 a lot rent, a couple $100 for the mobile home, you're paying $2,000 for a luxury condo or a luxury apartment And so you have this apartment where you have no ownership in, and you're overpaying. Well, not that you're overpaying, but you're paying a lot for it.
Yeah.
When you could be in a mobile home, like you're living a little bit more meager lifestyle, and you have a little bit of equity because maybe you own the trailer that you can eventually roll over into upgrading into a new home.
Yeah, because it is a ladder. Like you think, okay, I'm living in a mobile home park, but you need to climb the ladder without skipping rungs, because it's people who end up foreclosing on their homes. They try to skip from the first rung of the ladder to the fourth because they're super house poor, and then they got this paycheck to paycheck lifestyle. And so, it's something I really want to promote on the program. It's like this whole idea of a great reset. You own nothing and you'll be happy. It seems like there's a monopoly on development and real estate in Utah, and there's a certain elite population who don't want to allow mobile home parks, don't want to loosen zoning laws. They want to force you into that, $1,800 a month luxury condo you can't afford. Yeah. And it's just it's sad to see.
I don't know if that's the developers. I think it's more the communities and the citizens, to be honest.
Yeah,
but that's just me.
It is NIMBYism, really. And NIMBYism is elitism, ultimately.
Yeah, it is. It is. Because I think you could find developers, as long as the developer makes money, they're going to build whatever the heck whatever will be approved.
Yeah.
Like, in a lot of developers, I know Garbett Homes, they do a good job of, supporting community. Mm-hmm. So I guarantee if they could build, affordable homes in certain communities, they would.
Yeah, if they had the zoning and they can see the profit margin.
Zoning and every business has to have some sort of profit margin, but I bet you a whole bunch of people get on board with that if you get the community and the legislator, not the legislator, but the town hall on board.
Yeah, get the mayor and city council, and it's just not happening now, and it's not happening even in rural areas, and we'll get more into that a little bit later in the program. But you got your own podcast. Where can people go and sign up and listen to you?
Yeah, so that's at heyeric.com. So my name's Eric Gardiner, and I do the Hey Eric podcast. It's just kind of like I interview people. I talk about the market a lot, obviously, because that's what I'm into, and I research a lot. But yeah, check it out there and give it a follow.
Yeah. Yeah, well, thanks so much for coming on.
Thanks. Appreciate it, Richard.
All right, and we're having 2 more segments to this program. We're going to be talking to some recipients of some of the $50 million that was handed out by the legislature to develop affordable housing. We're going to be talking to 2 recipients of some of those funds today, in terms of how they're going to help get more low-income people into better situations, hopefully get more homeless people off the streets. That's coming up next. And then our final segment will be talking about a developer who was shut down by the city who wants to build affordable housing, how and why that happened. So that'll be in our next 2 segments, so stay tuned for that. I'll see you next time.